Hello, Serious Survivor here, and we see inflation at levels we've never before seen. The supply chain is at a standstill, gas prices on the rise, and people quitting their jobs. Let's take a look at what this is going to do, how this will affect us, especially this winter in the very short term. But first, a quick word from our sponsors for this video. Now, not everyone's interested in precious metal IRAs or 401k rollovers. Some people are happy putting their life savings on the stock market. Some people are launching themselves into property investment. Some like the idea of cryptos or leveraged investments, all at what looks like the top of the market. What could possibly go wrong? With the supply chain issues, inflation on the way, and unemployment climbing, isn't it all a bit risky? And don't even get us started on the $25 trillion of debt. If you've been thinking about investing safer so you can retire comfortably and sleep at night, it might be time to talk to Noble Gold about the tax advantages and other pluses of precious metal IRAs. Of course, you might just love uncertainty, but if you don't, this month Noble Gold is giving away a free America the Beautiful solid silver 5-ounce coin with any qualifying IRA you start. Call us at 877-646-5347 or visit our website at noblegoldinvestments.com. That's noblegoldinvestments.com. We're experiencing something in the United States now called the Great Resignation. And the Great Resignation is basically the terminology given to the massive amount of people quitting their jobs this year. And people are quitting their jobs for multiple reasons. We see people quitting their jobs due to pay increases, needing a pay increase, due to hours, due to working conditions, due to the ability to work at home. And then we see people quitting their jobs due to mandates and other things like that. But no matter what the factor is, no matter what the driving factor is that is causing people to quit their jobs, the fact is people are quitting their jobs. You know, some may look at this and think, well, this seems like a good thing because that means there's more jobs available for other people. To a degree that is true, but to a degree it's not true. There are more jobs available, but what this is doing is closing down smaller businesses, and it's going to cause a price increase. When companies can't sell as many products because they don't have as many employees as they did, their only choice to stay afloat is to raise the price of those products. So this plays into the fastest inflation we've seen in 31 years, and this is getting really disturbing because there truly is no end in sight. The current administration will predict that there is an end in sight and that things will work out, but it doesn't look that way for the average person. The annual inflation rate in the U.S. surged to 6.2% in October of 2021, the highest since November of 1990. And upward pressure was broad-based, with energy costs recording the biggest gain, 30% versus 24.8% in September, namely gasoline, an inflation rate of 49.6%. Inflation also increased for shelter, food at home, new vehicles, used cars and trucks, transportation services, apparel, and medical care services. And these rates all increased anywhere between 5 and 20%. One of the driving factors between the supply chain issues that we're seeing and what's going to make it worse is the increase that we just spoke about in gasoline, almost a 50% increase in a very short amount of time. Now this in turn, as everyone knows, is the prices of gas goes up, then that's going to increase the cost of delivery, which in turn increase the cost of goods. So we will pay for inflation on two fronts. We will pay for inflation at the gas pump, and we will pay for inflation with the cost of goods and services. And in the energy sector, people will see some massive increases and massive spikes in their energy costs this winter. When we think back to the beginning of this year, one of the major causes of the gasoline inflation rates was the shutdown of the Keystone Pipeline. This impacted workers immediately, laying thousands of people off, and as we can see, quickly drove the gas prices through the roof. Gas prices have hit a 7-year high amid inflation woes and supply chain fears, and OPEC is attempting to raise the prices even higher. The cost of gasoline drives the cost of everything that we do and everywhere we go, and everything we purchase drives those prices up. And if the cost of gasoline is up 49%, we're going to see a major spike in these other prices. With people quitting their jobs, with the mandates that we're seeing, with people losing their jobs, whether voluntarily or involuntarily, this is compounding the facts that we have inflation rates higher than they've been in 30 years, gasoline prices higher than they've been in almost a decade, and still on the rise with the closure of the pipeline. And we're going to see the supply chain break down even more. And as this supply chain breaks down, that too will contribute to the cost of goods. It's like a never-ending cycle. Gas prices go up, which in turn causes product prices and service prices to go up. And during a supply chain issue, in the middle of a pandemic, when people are being forced to quit their jobs or forced to do something they don't want to do, when we put all that together, then this is a recipe for disaster, an economic disaster like we've never seen. People talk about the Great Depression, and what happened then, but what we're facing now is quite possibly even worse than that. And the most concerning part about all of this is that it's basically government controlled. The government controlled the flow of gasoline basically by shutting down the pipelines and forcing us to buy our crude oil from overseas again. And the current administration really has no plan to combat this supply chain issue, to stop the cyber attacks that have slowed down a lot of our businesses, to battle the gas prices that are increasing on a day-by-day basis. It's almost every day we see gas go up a few pennies, almost every day. And we're seeing no action, just talk from the current administration. But let me rephrase that. We are seeing one more action, and that other action is Biden administration is considering shutting down the Michigan pipeline in the midst of gasoline price surges like we haven't seen in a decade. And during a supply chain issue, a major supply chain issue in which our ports are so backed up, products are floating in ships off the shores, and they're going to be there for months before they're actually unloaded in a lot of cases. We have workers quitting their jobs voluntarily. We have people being forced from their jobs due to mandates. And when we put all this together, we see now that the administration is considering shutting down another pipeline running from Canada to Michigan, transporting crude oil. Now, Michigan's Governor Gretchen Whitmer, a Democrat and a Biden ally, demanded the closure of this pipeline because of the, quote, potential for a catastrophic rupture along a 4-mile-long section in the Straits of Mackinac, which connects Lake Huron and Lake Michigan. And this is once again what's confusing to me. When Biden talks about infrastructure, we need to rebuild. Let's build back better. Their own words, build back better. Let's pass this infrastructure bill and let's take care of all this stuff. But yet, when we have a piece of our infrastructure that does possibly need repair or need upgrading, the only solution is to close it down. To close down the oil flow coming into that part of the nation is going to dramatically impact everyone in the Northeast region. If you think gas prices are high now, wait to see what happens once that occurs. And if this pipeline is shut down, then what we're going to see is a cascading effect at that point. And that's going to cause the demand of gasoline to basically increase while the supply decreases. And once again, we're going to see inflation. And current level for gasoline is 49.6%. It would not be unbelievable to say that gasoline will see a 100% inflation rate before the end of the year, which in turn will shut down companies, will increase the cost of products, will make travel for the average person impossible. And we're not even mentioning the other uses for crude oil, and that's our heating oil and things like that. A lot of people this winter who use heating oil in their homes are going to be shocked at the price they're going to have to pay probably by the beginning of December, mid-December. So we can expect this inflation to start hitting us very soon. It's already hitting us, but we can expect to see it get worse. As it gets worse, the supply chain is going to break down even more. It's going to break down even more. And the small sporadic shortages that we're seeing right now are going to increase to the levels of major shortages and food shortages and shortages of other household products. This is going to happen. It's already happening. and we need to be prepared. So we need to be prepared for what's coming, and what's coming is going to be a very dramatic time this winter. Well, thanks a lot for watching. Hope the video was informative. God bless, and for now, Serious Survivor out.